Alright, let's talk about price action. This is all about learning how to make really sharp trading decisions in real time, just by looking at a clean chart. No more clutter, no more confusion. Okay, let me ask you something. Does your chart look anything like this? Just a total mass of indicators, all screaming different signals at you. It's impossible to make a clear decision, right? That's what we call analysis paralysis. And honestly, it's a huge roadblock for so many traders. So you know what we're going to do? We're going to clean it all up. My goal here is to give you a simple, super clean, and really powerful way to look at the market so you can finally make those trading decisions with confidence. So here's what's on deck. We'll start with simplifying things. Then we'll dive into the 3 key steps: reading the trend, feeling the momentum, and finding that perfect entry. After that, we'll look at a real-world example, and I'll show you how this can become your new secret weapon in the markets. Alright, first things first, let's simplify your trading. You know, successful price action traders, they know a secret, and it's that simplicity is what gives you confidence. They don't need a million indicators on their screen because they've learned how to read the only one that really matters, the price itself. So what is price action really? Well, think of it like this. Your chart is telling a story. It's the story of a constant battle between buyers and sellers. And price action is simply the skill of reading that story to figure out who's winning and where the price is probably headed next. And the best part, we do it without all those lagging indicators that are basically just telling you what already happened. Okay, let's get into the nitty-gritty. Step 1 is all about reading the trend. You gotta know which way the river is flowing, right? You can't fight the current. Figuring out the market's direction gives you the context for literally every single trade you're thinking about. And the good news is, it's pretty simple. The market can only ever be in one of 3 states. You've got an uptrend, which is just a series of higher highs and higher lows. You've got a downtrend, which is the opposite, lower highs and lower lows. And then you have a sideways market, where the price is just kind of stuck, bouncing around in a range. Now this is a really important point about sideways markets. They are not all created equal. You have the ones that are moving in a nice, clean, predictable range. Those are tradable. But then you have the other kind, the choppy, messy, unpredictable ones. My advice, especially if you're newer to this, just avoid those. Seriously, stick to the markets where the direction is crystal clear. Alright, on to step 2, feeling the momentum. So, you've got the trend down. Now you need to get a feel for the strength behind the moves. Think of momentum as the speed and the power behind the price. It's what tells you who's really in the driver's seat, the buyers or the sellers. Okay, check this out. Look at this move up. To get the price from here to here, the buyers needed 7 different candles. You can almost feel them struggling, right? It's this slow, grinding, difficult push upward. But now, look at what happens next. All that hard work from the buyers, it gets completely wiped out by the sellers in just 2 big, powerful candles. See that? The drop is fast, it's aggressive, it's totally decisive. So, who do you think is stronger here? It's not even a contest, right? It's the sellers by a mile. And what's fascinating is that even though the price technically made a new high, the momentum was telling a completely different, much more powerful story. This is the kind of stuff those lagging indicators will almost always miss. And that brings us perfectly to our 3rd and final step, finding a safe entry. So you've got the trend, you've got the momentum on your side, but you don't just blindly jump in. No way. This last step is all about one thing, patience. It's about waiting for that one clear signal that basically screams, okay, go. And what is that signal? More often than not, it's a single powerful confirmation candle. You're looking for a candle with a nice, big, solid body and tiny little wicks. A candle like that is basically shouting at you that the argument between buyers and sellers is over, and one side has clearly won. That, right there, is your green light. Okay, theory is great, but let's see how this works in the real world. We're going to put all 3 steps together now and walk through an actual trade on the AUD/USD. So here's how it played out. First, we identify a really obvious downtrend, step 1, check. Then, we wait. We let the price pull back into a solid area to sell from, step 2, check. Now, we just watch, we observe the battle. And then, bam, there's our confirmation. That giant red candle tells us the sellers have taken control. That's our signal to execute the trade, step 3, check. And look, we can't talk about a trade without talking about risk to reward. For this setup, the potential reward was 2.5 times bigger than the risk, and that is so important. Why? Because it means you don't have to win every single time. Your winners will be big enough to easily cover your losers. Now, I gotta be super clear about something. There are no crystal balls in trading. This method, or any method, is not going to give you a 100% win rate. It just doesn't exist. Taking losses is just part of the business. See, your job as a trader isn't to be right all the time. Your job is to be a great risk manager. It's all about stacking the odds in your favor. By combining the trend, the momentum, and that final confirmation, you're just putting yourself on the side with the highest probability of success, and that's the whole game. So as you can see, this simple 3-step framework, it's more than just a bunch of rules. It's really a whole new way of looking at the market, and it's an incredibly powerful weapon to have in your arsenal. And that brings me to my final thought for you. What I've shown you is the framework. It's the starting point. But the real magic, that happens when you take this, practice it, and truly make it your own. When you get to the point where you can just look at a chart and instinctively read the story it's telling, that's when this becomes a seriously powerful tool for you. So I'll leave you with this one question to think about. After seeing how powerful a clean, simple approach can be, what's the very first thing you're going to take off your charts so you can start seeing the price action more clearly?